new concept of co-lending that has come in, which is a very India specific thing as far as I've understood. And what co-lending does is it kind of requires, so earlier, an NBFC used to get wholesale capital at a wholesale from a bank or any other financial institution, and they would lend it out to at a higher price to the customer. And they had these verticals of customers that they understood best, whether it was farming, whether it was a small business in rural India, whether it was a certain category of consumers who would be forced to pay higher interest because they didn't have a good credit score or a credit rating. But the regulator has sort of started pushing the banks more and more to saying, look, you've got to share in the underwriting and in the upside, which means you've got to co-lend, right? So at the infrastructure level, what that's done for Knight Fintech is it's created an opportunity to provide a co-lending platform where the banks and all their NBFC partners use the same platform. Because as a consumer, I don't care that your billing date is the 6th of the month and the other guy's billing date is the first Friday of the month. I am just making one repayment. The fact that the money came from two pockets, please don't make me sign two contracts, don't make me sign up with privacy policies of two entities and so on, right? So that whole piece has to be streamlined. And if you're a bank working with, say, 20 large NBFCs and vice versa, those 20 NBFCs are working with 5 banks, all of a sudden you have this, network effects that of complexity and point-to-point integrations and stuff like that become an issue. So there's a sort of a middleware play that they inserted themselves very cleverly into. And so that's one side of it. But what it has also done for the NBFCs is that it's given them a lot of leverage.